Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be talking about no seasoning cash out loans. Great topic here for today. We'll get started in just a moment. Just let us go live on all the different platforms. We put the chat up on the screen there, so feel free to drop a comment there in the chat. You can also put any questions you have as we go through the deep dive topic here today as well. We appreciate everybody tuning in nice and early. We'll start in just a moment here. Thank you for the comments coming in. All right, it looks like we're live on all the different platforms, so we can go ahead and get started. We'll take the chat off the screen, but keep dropping comments there in the chat. We appreciate it. And you can also drop any questions you have as we go through the deep dive topic today as well. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through live mortgage rates, and then we do a deep dive into a different topic every day. Today's deep dive is going to be no seasoning cash out loans. So our sales manager, Jose, with 28 years of experience, will take us through a deep dive of that. But before we do that, we'll do what we do every morning, which is go through the live rates for today. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like today.
All right, let me change my screen and we'll check it out. So as Kyle mentioned, this is our pricing tool for our team here. This will show us the general rates and the APR for today, January 4th, 2024, just after 11 a.m. Eastern Time. So all of our standard programs are live here. If you'd like a full loan estimate that breaks down all of the itemized fees that go into the APR, please get with our team members. We have over 300 licensed loan officers in 23 states. So to compare across the programs, we will set up a basic scenario so we can compare apples to apples here. We'll start with a $400,000 loan amount. We will set the LTV to 80% loan, 20% down payment. And we will ask the computer to find the best rates we can offer today, the lowest rates for conforming conventional. And then we'll compare that to FHA, which is usually the next option that most buyers look at. And then we'll check out expanded guidelines, also known as non-QM, where we have over 5,000 additional options beyond the standard. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. We'll quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know, and we quote it up, no problem. We'll start with conforming conventional, purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio of 40%. So with these settings, as we do every morning, let's check the standard rates. And not much change, pretty much the same as yesterday. Again, 6% rate, 2.5 discount points in cost, puts the final APR 6.287. Pretty much the same as it was yesterday and the last couple days, which is a welcome change from just a couple months ago. It was over a point higher. Now, if for any reason our customer doesn't qualify for conventional, usually the next option we want to look at, we'll set up the same exact scenario, is an FHA program. FHA allows more leniency on credit issues as well as a much higher debt to income ratio that you can go to. However, for the demo, we'll keep everything exactly the same so we can compare apples to apples here across the programs. So, FHA went up a little bit yesterday. Looks like 5.5 rate, 2 discount points in cost. Puts the best option here at 6.392 final APR. Now, this is a touch higher than conventional today, which they're kind of flip-flopping a little bit, but definitely recommend our customers that qualify for both. Definitely look at both. Some days FHA may be better, and in some situations, FHA may work better. And for customers that must use FHA, these changes to the MI that happened last year are definitely welcome, as now it's a very comparable option for our customers that must use it. It's still relatively the same to conventional here when you put all the costs in the APR. Now, where we love to specialize and get excited is if, unfortunately, a customer doesn't qualify for either program. Many other banks or lenders will have to deny that customer, but that's where we love to come in and present our 5,000 additional options under expanded guidelines, where we can get our customers qualified using alternative income if they don't qualify for conventional or FHA. So we'll keep everything the same for this demo, except now we have a new option pop up for income. So full doc is what we use for conventional and FHA. That means 2 years of tax returns, what most people are used to. So we'll typically choose an expanded guideline non-QM program to take advantage of an alternative. We have asset-related programs, business bank statement programs. The investor Dscr programs are just for investments. We'll show that in a second. Personal bank statement 12-month is the most popular program by far. That's what we'll use for the demo. We have RSU, stated income, VOE, 1099, P&L, no income, CDFI, all kinds of different options here. But our most popular is the 12-month bank statement, and that's for our self-employed borrowers. Many times the self-employed borrowers have various write-offs and may not qualify at all, or may just need a little extra income to get that home they want. Either way, we solve the problem. No tax returns at all, just 12 bank statements, the last 12 bank statements, to determine a debt-to-income ratio of 40% in our example, using just the cash and the bank statements, no tax returns at all. So most of our self-employed borrowers qualify for much more income using this method and can therefore get the homes they really want. So let's check out the bank statement options today. Oh, wow. Someone came in smoking. So these don't change often, but they just changed yesterday to today. So we have some new non-QM rates. Remember, those only update usually once a week, maybe less. So fortunately, we've been waiting, right? Since last week, everything updated. Now we have non-QM action. So this is good, guys. 6.625 rate, 2.25 discount points in cost, puts the final APR at 7.006. So we have an option here that's less than 1 point difference from conventional for the same loan. So absolutely amazing there when non-QM can get within 1 point of conventional. For a while, when rates were crazy, we actually had some non-QM beating conventional. But this is a great option. And then we have a ton of other options here as well. Some of these have not changed in the last week. Some probably will change coming up here. So if we scroll down, tons of different options, hundreds of variations. Some of these at higher rates and costs may allow bankruptcies, foreclosures, other types of credit issues, and some may use slightly different ways to calculate the bank statement income. So tons of different options here. Please get with our team to find which of the hundreds of versions work best. And before we get into Jose's cash out examples, obviously we don't do any refi on the live demo here, but Jose will. We'll do some live demos for investors. We love to work with investors, first-time investors, seasoned investors. We have great options. So we'll set up the same scenario, 400,000 loan amount, 80% loan, 20% down payment. And we'll have the computer find the lowest rates we can offer for conforming conventional. And then we'll check out our expanded guidelines, also known as non-QM. And remember, our government programs, FHA, VA, USDA, do not work for investments. So we will just do the top two here. We'll start with conforming conventional. Everything's going to stay the same as our other demos. The only thing we've changed is the occupancy. So you can check out the conventional rates for investment property. Little bit different rate sheet here, but about the same as it was before. 6.875 rate, 3.5 discount points in cost, but the final APR 7.290 here for a conventional option. Now this is definitely better than it was before. Before conventional was a little bit crazy. These are very feasible and good options. So definitely recommend our customers looking for full doc regular options can now look to conventional again. However, I'd recommend all of our MLOs and customers compare an investment non-QM option. So for the final demo, we'll set up the investment, 80% loan, 20% down payment. And this time we'll select our expanded guidelines, also known as non-QM. So the first thing we need to pick here is our income type, the most popular income type by far for an investment property. And our most popular loan by far is the Dscr option. And that's because it doesn't require any income or employment or documentation on that from our borrower. Simply use the estimated rental income from the appraisal to determine a Dscr value. stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. We still have options for ratios under 1, but for the demo, I always put 1.5 as the highest value so we can see all the programs pop up. And finally, prepayment penalty is standard for non-QM investments. 3 years is what we always select for the demo. You can select 0 prepayment, that will cost much more and limit the programs that show up. You can also select 5 years, which will limit what shows up, but does save our customers some money if they're going to hold the property. 3 years is standard. That's what we always use for the demo. So let's check the Dscr options this morning. Whoa. Someone is going crazy here. So, excuse me. This is pretty unbelievable, Jose. You got a comment on this?
That's the comment is that is correct, because that's I was just noticing that myself. There are
Wow,
smoking
they're
everybody.
smoking. So this is smoking. 6.125 rate, 3.375 discount points. We have a Dscr option beating conventional. Wow, that's amazing. 6.604 APR. Remember, conventional was 7.2 something. So smoking conventional right now. Wow, amazing. So definitely recommend all our Dscr customers lock in this product while they're offering some amazing discounts here on this product. Now, if we scroll down, there's hundreds of variations. Obviously, some at higher rates and costs. May allow things like bankruptcies, foreclosures, other issues, may allow different types of things like short-term rental income, very popular request. So tons of variations here within Dscr. Please get with our team to find the best one. And to segue into our topic today, one of those variations that's allowed on a certain subset of those programs is our topic for today, the no seasoning cash out. So when I do the live pricer, we don't do refinances. That complicates it a little bit. We want to compare apples to apples, right? So we're going to just do a standard scenario across all the programs. But Jose today is going to talk about cash out, right? So our investors love to get cash out of their investment properties, especially when they get a good deal on them, especially when they're doing the fix and flip and doing some rehab or any type of CapEx to improve the value. Or sometimes our investors are just lucky enough to stabilize a property as well, where it may not have been stabilized before, and can quickly do that and then execute a cash out in order to realize that additional value that hopefully most of our investors have added. Now, there are some no seasoning options for primaries as well, but this is mostly our investors that are interested in these options, so I'm sure that's what Jose has focused on here. So Jose, let's first talk about seasoning so we make sure we're all on the same page there, and then let's go into these examples, please.
Absolutely. Let's get into what we actually mean by seasoning, because we're not really talking about adding some extra salt and pepper and other nice spices. We're talking about your ownership on title, right? How long has the current owner, whether it be individual or entity, been on title? Now, I will state that if the individual had ownership in an individual name and then during, in the last 6 months or whatever, transferred it to an LLC, as long as they are 100% owner of that LLC, there really has not been a change in ownership. So the seasoning would go back to when they originally purchased it and not when they transferred it to the name of their entity, whether it's an LLC, an S Corp, a C Corp, or a limited partnership, which are the most common forms of ownership. So seasoning on title is critical to this type of deal. Now, the no seasoning options that we have are basically you're on title today. You can do a cash out refi tomorrow for the market value, whatever is the market appraised value, instead of the purchase price plus renovations. Purchase price plus renovations is usually the value you are given when a seasoning issue is noted. By seasoning issue, we mean that the borrower is on title for less than the minimum amount of time that they require of seasoning for that particular loan option. The standard in the industry in non-QM, which is the best case option for these loans, is 6 months. However, there are 3-month options, there are 12-month options, and there are 0-month option, which is the key point today. So just be aware of what we mean by seasoning, and now how do we use this? What is excuse me, the most effective way that we use these no seasoning loans are for our investors, for example, that may have purchased a property which needed rehab. So they either purchased it cash, or they purchased it with hard money, or a fixed flip rehab type loan, basically, which is a bridge loan, just like hard money is a type of bridge loan. And now they need to refinance out of that bridge loan because the rents are so amazing. They want to keep the property. They really like how it came out. They feel possibly that as the interest rates dip, prices will continue to rise, and maybe they'll sell it 6 months to a year from now, whatever their choice may be. They've chosen to keep the property. So then they usually want to cash it out for the maximum amount of benefit. And the maximum amount of benefit will be when you can cash it out using the market value instead of being restricted by the purchase price plus renovations. Because many times you could have a $150,000 purchase price, borrower put in $50,000, and maybe the property is worth $300,000, right? As opposed to having it be $200,000 if we're being restricted by purchase price plus renovations. So you'll see why the investors absolutely love this. Keep in mind, there's a lot of flippers out there that are doing moderate rehab in 2 to 3 months, right? And some of these loans, the ones that give them the best terms for some of the funky options that they get out there, are going to be a 6-month loan, which means that at 6 months and 1 day, if they have not refinanced out of that loan, they are now in default of the note, and it becomes very difficult to then refinance into anything that they're going to want to refinance into, because there may be restrictions, because now they may be considered in default of the note. Some options out there, if they get an extension of the note, may accept that. Others don't. That's going to be case by case. You'd have to review the guidelines, but that is a very sensitive situation that is easily avoided with our no seasoning cash out refinance loans. So I have a few examples to share with you here today. First example is for a 1 unit.
Can you zoom in a touch, Jose?
Sure. 1 unit up to a 75% LTV on this one here. And we're looking at our lowest cost option at 9%. And you can buy that down to 7.875. Now, this is with a 3-year prepay. This option in particular does not allow for a 5-year prepay. Just let you know that. So if you run the scenario with a 5-year prepay, you're not going to get this option. And now I have the same no seasoning cash out option at 70%, so that you can see. Okay, make sure I'm in the right spot there. Now look at what happens at 70%. Looks pretty amazing there. 7.125 at a quarter point, 6% costing 3.375. So now we have our 2 to 4 unit at 75%, and it is no loan level price adjustments for 2 to 4 units. So again, 9% lowest cost option, 7.875 lowest rate option. And now a little treat here, 80% cash out refi. right? And this is fully lender paid pricing on this one, right? Even though this is a brokered option, I priced it out fully lender paid, so that we can compare apples to apples, and we are at 9.5% here on the interest rate. There are buy down options on this one, but 9.5% was the closest rate to par. 80%. Now, same option, 80% cash out, but for a 2 to 4 unit property, we can still do it. There is only a 0.25% rate increase for the 2 to 4 properties, 2 to 4 unit property, 9.75. Now, I throw a couple of different options out here, give you a little context. Now, this is 3 months seasoning at 75% LTV, right?
Don't overlook these options though, guys, because most investors take a couple months to stabilize, right? And whether they're doing a rehab or just renting it, right? Remember, it needs to be leased a lot of times to do the refi. So don't be scared of the 3 months. It's a good option.
Yeah, no, there's just some restrictions on there. You have to look at it. They do max the property value and do max the loan amount. I believe it's 750,000 on the property value. So again, there are some restrictions, but if you fall within those parameters, and it's a rehabber that's just looking to get out of the loan they're in, this is a great example because it takes you to 75%, but you reduce the interest rate substantially over the other 75% option. And then to add more context, this is I just searched for 6 month seasoning, and it's basically the same option that I just showed you. At 3 months seasoning is the best option. At 6 month seasoning, but here now it's 6 month seasoning. There are no restrictions on loan amount or property value. 6 months is their regular guidelines. So again, amazing rate here. This is the one that you were looking at there, Nick. So 7.5% is almost at par. 6.375 is your lowest rate option. And I did have to check it several times and make sure I had everything clicked properly, rub my eyes, do all these things because I saw it. I'm like, whoa, what's going on here? You know, it looks very interesting.
Yeah, usually we don't get a whole point in adjustments, but some investors out there are obviously wanting to get some loans going. I think they see the rates going down and they're trying to buy their way in, right? They're wanting to grab market while they can.
Somebody's trying to corner the market, you know, get a little momentum here and maybe have it trickle down to their other product offerings.
Exactly. So amazing options. Non-QM just blew up today, guys, as far as you'll see probably a bunch of rate updates as well today if you already have quotes in the system. So should be a good day for everybody, even though the news wasn't so great for conventional and, the 10-year in general the last couple of days. Non-QM is finally reacting to the general downward trend that we're seeing. So great stuff. Looks like the only question we got is a license question. That's not for everybody, so I think you can probably take it away, Kyle.
Yeah, absolutely. All right. Well, remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Have a great day.